It usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this, or a hedge fund. Hedge funds, a good hedge fund that loses 10 or 20 billion, that's also good for flushing, and that's happened many times before. These are guys that have never seen this kind of a market, so they set up a position that went awry, couldn't unwind their leverage, and they just get wiped out. And you don't really bottom until you get that flush.
And if history is any indication, we tend to always have a robuster market around the time of the midterm election. So that would kind of time in perfectly.
Yeah, every time's different, but this election is going to be really interesting because if the polls are any indication, wow, we're going to get a shift in both. The Hill is going to completely shift, and so you would think there'd be some policy moves now by Biden to try and offset the slaughter fest he faces.
So that was from yesterday. Kevin O'Leary was on Stansbury Research speaking about the economy. And from time to time, or a lot of times on this channel, we talk about politics. And I do that because it really is the driving force behind the market. And it took me a while to figure that out. But now that I've come to terms with it, that's why it's brought up so much on this channel. Ape Nation, what's going on, guys? It is Sunday, May 22nd, 2022. And let me give a big shout out to Frankie Muhammad, who actually, I found this clip from him, so shout out to Frankie. And I want to talk about this. I know in the thumbnail, we have brackets. We're going to talk about brackets too. But this just developed in the last 24 hours, and I want to touch on it a little bit. But before we get way too far ahead of ourselves,
cue the speeder.
This is the way.
In addition to more voters being okay than not okay with Ukraine losing the conflict in Russia, 43 to 41%, a majority of Americans think it would be better for Biden to leave office than for Putin to step down, 53 to 44%. More Americans would rather have Joe Biden step down than Putin. Americans like Putin more than they like Biden, according to this poll.
Come on. And Mitch McConnell said, let him go bankrupt. Let him go bankrupt. Come on. Learning to live with it. Come on. We're dying with it.
According to the latest poll, they consider Russia the fourth biggest threat to the United States at 16%, behind North Korea, Iran, and China.
So that was from Jimmy's show in the middle of the week. I thought it was pretty interesting that Americans, foremost on their mind as far as foreign adversaries, would be China and the Chinese. And I don't think, I would say maybe, if we're lucky, 5% of the population knows anything about the Chinese economy right now and what's going on with their real estate development, especially commercial real estate, right? AsiaMarkets.com, this article is from May 17th, 2022. It says, dire Evergrande warning amid fears of brutal collapse. A leading investment advisor has dismissed suggestions China Evergrande is recovering from a debt crisis. The article continues with the next subheading saying Evergrande deep in the woods. Experts have pointed out that Evergrande has staved off financial catastrophe, but if asked on the We Study Billionaires podcast if they are actually out of the woods, he said, if anything, they're deeper in the woods. This is a highly, highly indebted company. The next subheading is wider market concerns. Commenting on the recent missed bond payment by Chinese developer Sunac, Calhoun said the Chinese real estate market is finally collapsing and it will be brutal. Okay, so I want to say this really quickly because there are some rumors going around that the effects of Evergrande are already baked into the market, and we've already seen that in effect for a while, so that's not going to make a big deal. And, there's both sides to that story, and I understand that. But let's just say hypothetically, if we were to believe going forward that this executive order, the Chinese companies, the fact that their real estate market is collapsing, we have inflation out of control, interest rates are going up, all of those different factors, They're going to be twirling around with each other over the next, 7 to 21 days. Basically the next 3 weeks till about late June. A time period very similar to last year. Matter of fact, the price of AMC today is within $2 of where it was a year ago. And look, over the next couple of weeks, we will talk about this more. We will keep up with this. We'll find out what's going on. But really, the only reason I'm moving on right now to talk about the brackets is in case that this becomes a reality. And this is actually something that leads towards us moassing and getting this thing done. All right, so let's try to keep this quick, painless, and halfway informative. The next graphic that you're going to see, I don't want any laughing. This guy right here, Johnny Lamborghini, he's an ape. He's one of us. He's an AMC retail shareholder. And in the last year, he has managed to accumulate 100 shares. He's got 2,000 invested into AMC. And, of course, every number on the screen, guys, that you see, the red and green numbers, are all made up. They're all conjured. I have no idea how many shares he actually has. And I have no idea what price targets he's looking at. I also don't know if we'll far surpass these green numbers or if we won't even get up to them. And no one knows. But let's just say hypothetically, he needs his first 2,000 back that he had to recoup his original investment. He sells 5 shares when the price hits $400. And now he's playing with the house's money. So he will probably buy and ride this wave, buying as he goes up in increments. Those could get smaller or larger. Now, guys, remember, we're going to have dips. This is going to come back down. You're going to have to be patient. If you watch the Wall Street Diamond Hands MSNBC doc, you saw what a stressful situation it was. All right, you're going to have your spouse or sibling or someone in your ear. So you really need to try to remain focused and calm as much as possible. And it's going to be hard because it's going to be exciting. So think of the brackets as basic ranges, right? You could look at the sell 5 at 400 and sell 10 at 800. In between, you might sell 2 at 6. When I first got into this play, I said I want to make sure I have enough shares so I don't sell myself short, that I don't sell too fast and run out of shares and not be able to get higher denominations in case this thing runs out of control, which it has the possibility to do. So I've been preaching that on this channel. Make sure you load up, load the boat, especially right now. The stock is $12 a share. Guys, I'm well aware that the example I just gave you is very elementary. It's very bare boned and basic, but I wanted to keep it that way. I don't want things to be overcomplicated. Trying to answer a million questions. I know you guys are extremely smart. I have some of the smartest subs on the planet. So I don't need to explain too much to you guys, but just to give an example and with those hypothetical numbers to give you an idea of how you can set yourself up the next couple of weeks. Sooner than later, I would recommend doing it just in case. All right, now before I let you go, I want to play this last little clip from Kevin in the interview from STANSBURY. And, well, watch.
Yeah, that's for his scenario it is, but I don't agree with that scenario at all. First, I would say, including anybody that wants to make forecasts about when the start of a recession happens, they simply don't know. And nobody knows right now because it's really hard to read the tea leaves in this market. And so the question that everybody, including me, has every day when I see a correction like this, when I see Walmart down 20%, for example, which is a bellwether stock, if I'm an opportunist, I might put on a position. But what I'm doing right now is I'm waiting. I'm waiting for the big event, as I call it. And you get these events, and we talked about it. That day will be an interesting day to put 1/3 of your positions on. It'll be a day of panic. We'll be down somewhere between 2,000 and 3,000 points. And yeah, it's horrible to talk about it, but that actually is very healthy. Very, very healthy. You get the PE of the market down into the 15 range, even lower. That's a tremendous buying opportunity. And I actually think earnings are going to be pretty good into the first and second quarter next year because we're still at full employment. And so, you know, all of these concerns and the Armageddon scenarios, and these are putting pressure and compressing PEs, but I haven't seen the downturn of the consumer yet. And so you need to kind of see that. Everybody's forecasting it, that's true, and pricing it into the stocks of consumer products and retailers like Walmart and Target. but they actually haven't seen it yet.
So that's a lot to take in, right? But he's waiting for some type of major event that's going to cause some type of panic. And that'll be the day when you can take advantage of some things. And look, he's not saying anything about AMC, GME, or a short squeeze or anything like that. This could have to do nothing with it at all. It also could have everything to do with it, because there's so much over leveraged short positions out there. All right, guys, I'm gonna leave it there for tonight. This is a 3-day video. Somehow this thing got trashed a couple times. I saved a couple versions. This is the final cut. I'm done for the night and the weekend. Love all you guys. Thank you so much for everyone who came last night to the live stream. My mods, Tony for coming, Pantheon. I appreciate all of you guys. Thanks for all my likers, my viewers, my commenters, my new subscribers, my OGs. New week tomorrow, guys. Let's stay positive. We are here to break the wheel. This is Ape Nation. I'm the Massalorian, and I'm out.